Morning to all traders and welcome to this Monday's Marketing Insights video. Today is the 21st of December. We've had last Friday marking actually the last Friday of this year and in terms of trading session. And we talked about the potential for reaching a deal, both in the stimulus deal in the US and also a Brexit deal between the EU and the UK. The former was successful. We have had actually a deal reached now for $900 billion. It needs to be approved, of course, and signed by Trump today. But one would indeed expect the equities and risk appetite to rise. However, we saw this move to have a minimum effect in the markets, at least so far. And that seems to suggest to me that the last minute agreement was pushed forward in order to avoid a shutdown before Christmas rather than anything else. It is indeed there, but I don't think this is exactly what at least Democrats would have hoped for. But is there either way? We might see markets actually rising once we get the US open. And along with that, we might see some of the emerging currencies also being supported. Now, between the EU and the UK, all stumbling blocks seem to have been sorted apart from the fisheries. Okay, so that still remains the main issue, and this is why we're actually seeing the FTSE being also dragged down. At the same time, the coronavirus cases, the situation in general in the UK and the European Union is worsening. We've had the EU, a lot of EU countries actually banning UK travel. And now if we combine these two together, we've seen actually the pound being ranked lower, with the FTSE hit relatively strong, I would say. So that said, today is indices day. We're going to have a quick look at the S&P on the USDIndex, FTSE, and also Germany's DAX. On the S&P, we talked about this potential down here ending wave B over here for in wave 5. We are looking at this as a corrective ending diagonal, okay, and we are expecting, I'm still expecting actually prices to move higher to around the 4K mark, right? If we get there, then this is going to be an indication that most likely we'll have wave 5 ended here, okay. Now we do see supporting signals for a downside, both of the MACD and RSI, but I do believe they're going to be cancelled very shortly, and most likely we're going to get a new signal on MACD and the RSI over here, because I'm looking for more upside on the S&P. Okay, the other case would be, as we talked before, this is an expanded flat, and with the potential, of course, to get to 38.49 and then still move lower. Still remaining valid, of course, right? Once we get a break above the 38.50, then this is when I will be considering this as an input on the upside, or either the ending diagonal rather than a part of wave 4 in a corrective expanded, probably running flat pattern actually. The index is moving exactly as we expected. We call the 89.76 as the 200 Fibonacci extension of waves 1 and 2 over here last week, because I was expecting for more downside. That has been done now. To me, if we take into consideration the signals we see on the RSI and MACD, this is a reversal signal for wave 4. Reversal, I mean, in the short term, right? So we could get up to anywhere between 91 and 92.80. I would assume that the 91.64 might be a good level, but at the end of the day, you know, since this is wave 4 right here, we could literally go up to 94.70 or so for wave 4, right? The other scenario though would be that, you know, this is wave 1, 2, this is wave 3. When I get wave 4, and then we're going to get 5, right? So I will be expecting for this trend line to break, to somehow validate that this impulse to the upside is indeed strong, okay? And the first level to look at would be obviously, you know, the breakout of here would be well above 90.60 or so, and then we'll be looking for the 91.65, right? This is not a straight line up, just do not forget that, right? Now on the FTSE, last week we called this as a wave 3 because it's 161 extension of waves 1 and 2, and we said we're expecting, indeed, because we had this signal popping up, we're expecting another move to the downside for wave 4 to come through. I'm looking at the 62.46 as a double bottom over here to be that level, and then perhaps we can move higher for the 67.80 to take out wave 4, right? And once wave 4 finishes, then we'll go down for wave 5. So we're looking for, in the medium term, for downside towards the 5k mark, right? Now there is also a scenario that this is 1, 2, 3, 4, and 5, right? But this is not as usual because the 161 usually is the end of wave 3 rather than the end of wave 5. But keep that in mind, it might be possible, despite the fact that I don't think this is really an impulse. It looks more corrective than impulsive. And last quick look on the German DAX. We called this last week as well. We were looking at this as the end up here, right, for wave 5, which is the previous high over here. So ideally we would want the prices to move back up, right? This is 1, 2, 3, 4, and 5, and we are turning lower, or we're gonna see a correction over here and then another move to the upside, take the 13.8 to 27 out, and then move all the way down. And this move to the downside, supported both by MACD and RSI, at the moment at least, is going to bring us to at least the 11.3, right? And this is going to be, of course, a double bottom, wave 4 and primary wave 2 over here, cycle wave 2, excuse me. And then we could be looking for prices to start breaking to fresh highs, unless if, of course, we get a deep pullback that is going to get us even lower, down perhaps to the previous wave 1 here, 1030, or even to primary wave 1, which is the 92, 9300s. Okay, so this will be all for today. We will go again, of course, on our market insights video tomorrow with FX majors. So keep an eye on what's happening in the news, and we'll see you again tomorrow.